Welcome to your comprehensive look at what 2026 holds for Bitcoin and the broader crypto ecosystem. Forget just the price charts. This is a story of deep structural change, where Bitcoin's maturation, massive institutional adoption, and a fundamental rewiring of global finance are taking center stage. Here's a look at the key themes and predictions defining the year ahead. The great debate. Is the four-year cycle over? Analysts are fiercely divided on whether Bitcoin's historical boom and bust pattern will continue. The new era argument. Core belief, the old four-year cycle is dead due to institutionalization. Key evidence, steady institutional buying via ETFs acts as a buffer against retail-driven volatility. Supportive monetary policy, Fed rate cuts, create a favorable macro backdrop unlike past cycle peaks. Major proponents, Grayscale, Bitwise predicts new all-time highs. Van Eck calls Bitcoin a top 2026 performer. The history repeats argument. Core belief, the classic post-halving correction is playing out as expected. Key evidence, the October 2025 peak aligns perfectly with past cycle timelines. Technical analysis suggests a longer corrective phase, wave A, B, C, could last into mid-2026. Major proponent, Fidelity's Jurien Timmer, expects a lame or off year.
The 2026 price landscape, a spectrum of possibilities. The price debate reflects the market's uncertainty. You'll find a wide range of expert forecasts and key technical levels to watch. Expert price forecasts for 2026. Grayscale, new all-time high in first half of 2026. IG/consensus range, 120K to 170K. Fundstrat, bull case, greater than 400K. Van Eck, top performer, thesis tied to gold's rise. Fidelity, bear case, support at 65K to 75K, year off. Galaxy Research, options imply wide range of 50K or 250K by year end. Key technical levels and scenarios. Immediate resistance, 100K to 105K, needed to re-establish bullish trend. Critical support zone, 84K to 86K, must hold for upward momentum. Deep correction targets, 70K, then 58K, if bearish pattern continues. The unstoppable institutional machine. Regardless of short-term price, the institutional build-out is accelerating and changing the market's very structure. ETF dominance. Spot Bitcoin ETFs are expected to purchase more than 100% of the new supply of Bitcoin, Ethereum, and Solana in 2026. Despite recent outflows, institutional holdings have remained remarkably steady through the Q4 2025 drawdown. Wall Street embraces crypto. Major banks are moving beyond custody. JPMorgan plans to accept Bitcoin and Ether as collateral. Morgan Stanley, PNC, and Citi are developing crypto trading, settlement, and tokenization products. New capital avenues. Look for more than 100 new crypto-linked ETFs to launch in the U.S. and for half of Ivy League university endowments to make their first crypto investments. Crypto rewires global finance, stablecoins, and tokenization. The most profound shifts in 2026 may happen underneath Bitcoin in the infrastructure of finance itself. Stablecoins become the internet's dollar. With the Genius Act providing federal clarity, stablecoins are poised to overtake the legacy ACH network in transaction volume. Major card networks will begin routing cross-border settlements over public blockchain rails. Tokenization goes mainstream. Tokenized real-world assets, or RWAs, will move from pilot to production. A major bank or broker is predicted to begin accepting tokenized equities as collateral, treating them identically to traditional securities. Corporate blockchains emerge. At least one Fortune 500 company, a bank, cloud provider, or e-commerce platform, is expected to launch its own blockchain, settling over $1 billion in real economic activity on it in 2026. The regulatory battleground. Policy will be a major catalyst, with several critical deadlines and decisions looming. The Clarity Act. Progress on this key market structure bill has been delayed to January 2026. Its passage is seen as crucial for providing the regulatory certainty needed for Ethereum and Solana to set new all-time highs. SEC Innovation Exemption. The SEC is expected to grant some form of exemptive relief to allow tokenized securities into DeFi, but will likely face an immediate lawsuit from traditional finance trade groups. Stablecoin rulemaking. Federal banking agencies have a July 2026 deadline to finalize comprehensive rules for stablecoin issuers under the Genius Act, which will define the competitive landscape. Final analysis, a pivot year. 2026 is shaping up to be a year of powerful contradictions and pivotal change. Short-term versus long-term. The year may be marked by chaotic and range-bound price action in the near term, playing out against a backdrop of unprecedented institutional and structural growth.
The big picture. Even analysts predicting a boring or corrective year for prices remain long-term structural bulls. The overarching narrative is that Bitcoin is maturing from a speculative asset into a legitimate macro hedge and a cornerstone of a new financial system being built on blockchain rails. To distill this further, the fate of 2026 largely hinges on the interplay between two powerful forces. The macro and technical picture, will Fed policy, election outcomes, and the resolution of the current technical correction create a tailwind or a headwind? And the adoption flywheel, can the momentum of ETF inflows, regulatory clarity, and real-world use cases like stablecoins for payments outweigh any cyclical or macroeconomic drag? What aspect of this evolving story interests you most? For example, would you like a deeper analysis of how the Federal Reserve's potential leadership change in 2026 might specifically impact crypto markets?